AMD is looking cheap as the stock has fallen by over 10% in just a matter of a couple of trading days. But how cheap really is the company, as we are seeing some analysts actually downgrade the stock despite increases in AI spending? So in today's video, we are going to discuss this downgrade from Goldman Sachs, as well as Microsoft's targets for AI spending and what ultimately that could mean for AMD as they announce their earnings over the next couple of quarters. You guys keep showing love to the channel and I greatly appreciate that. We are making a few upgrades to the channel and I plan to continue this over 2025. I see this as being a big year overall. So thank you guys so much for the support. If you haven't yet subscribed and you want to support the channel, that is the best way to do so, as well as dropping a like down below. Thank you guys so much and enjoy the video. Before we jump into AMD, let's go ahead and take a look at the YouTube portfolio. It's currently sitting at a value of $57,149.95, down about $2,000 from its all-time highs of around $59,000. That's due to these sell-offs that we've seen over the last couple of weeks. And there's been a number of different changes with the YouTube portfolio. We currently hold 15 shares of Alibaba, up around 4%, Google 5 shares up 14%, Apple 4 shares up 400%, Microsoft 1 share up 300%. One of the biggest changes is with Palantir. We now only hold 10 shares of Palantir. We sold off 90 shares. We're up around 600%. When we sold off, we were up around 700%. So that happened to be very good timing because the stock has dropped quite a bit in the last couple of weeks. PayPal, we still hold 10 shares, up almost 40%. SoFi, 200 shares, up around 140%. And then this is the other big change. We added Super Microcomputer, 50 shares. We're currently down just under 7%. And then we still hold Visa, 3 shares, up almost 16%. On top of those positions, I also hold a couple of dividend ETFs, SCHD and VYM. And as each day goes by, I get a little bit closer to selling out of SCHD. I think that this cash right now, it's not very well deployed in SCHD. I think that there's going to be a lot of opportunities in the market, especially if we see this downturn continue over the next month or so. There's going to be a lot of deals that pop up. And for me, being cash heavy going into that is going to be super important. And one of those companies that could end up being a deal is AMD. This week, the stock fell by 4.5%. In the last month, it's down around 11%. Over the last 6 months, it's down almost 40%. And if you look at the last year, it's down only 21%. However, from its all-time highs back in March, the stock has fallen by over 45%. If you believe in technical analysis, which I'm not really a fan of, but it looks like it really hasn't hit support quite yet. A lot of the support for this stock appears to be around this $100 mark. We can see it kind of here back in 2023, as well as back in 2021, and then even at the end of 2020. There were a lot of different time periods where the stock kind of traded around this $100 mark, and we're still about $15, $16 off of that. And one of the more recent events driving AMD's stock price down was a downgrade from Goldman Sachs. Goldman analyst Toshiya Hari downgraded AMD from buy to neutral on Thursday. He also cut his price target from $175 to $129. This sent the stock down in the pre-market on Friday by 5.6%. And Hari made the following comments on the reason for the downgrade. Needless to say, the bar is significantly higher in 2025 for AI names to sustain their outperformance. Investors are increasingly concerned given the high bar, and as such expect monetization of billions of dollars in capital spending by the major CSPs and consumer internet companies to come under increased scrutiny as we progress through 2025. There are really 2 points that are being brought up here. In this first statement, he is saying that the bar is significantly higher in 2025. What he's talking about here is the bar for growth. These AI companies are expected to continue growing at very fast rates, and that's what investors have priced into a lot of these companies by driving up valuations. And he's concerned that in 2025, this growth could actually slow down, causing the stock prices to pull back. And the second major point that he brings up is the monetization of AI. Currently, we still have yet to see major influences from AI where this is affecting companies' top and bottom line numbers. We see it a little bit in Meta and Amazon. They have done a good job of implementing AI into their current systems and being able to show how that's actually impacting customer and business experiences. However, a lot of these other players are still trying to figure out exactly how to monetize this capital that they're investing into. And that's where he thinks that a lot of companies may start pulling pulling back on this capital as it begins to get scrutinized by investors and the board. In my opinion, I kind of agree with this second point, where if companies are not able to monetize AI effectively, obviously they're going to pull back on some of their spending, and that could ultimately lead to having big impacts on companies like Nvidia and AMD, as they are the major players in the market. However, one thing to consider is how much of that is actually being priced in. He's obviously saying that there's a high bar in 2025 for AI companies to continue growing at fast paces. However, over 2024, we just saw that AMD's stock price has dropped by over 45% from its all-time highs. So is some of this already being priced in? And that depends a little bit on what you are looking at, because recently Microsoft came out and announced that they're expecting to spend $80 billion on AI infrastructure in fiscal year 2025. There's a couple of key things to keep in mind when hearing this. They started fiscal year 2025 in July of 24, and it will end in June of 25. That means they are currently around halfway through their fiscal year, so we would expect them to be about halfway through their spending. However, right now we only have results for their Q1. Their Q2 results will be released on January 29th. As of Q1, however, they had spent $20 billion on capital, with $14.9 billion of that being spent on property and equipment. And obviously, if they continue at this pace of $20 billion each quarter, they will hit that $80 billion mark. However, if we see any sort of weakness or concerns from investors or the board around monetization of this AI and this capital, ultimately we could see this affect how much Microsoft spends, and they could pull back from this $80 billion mark. That is just an estimate of where they are projecting that they're going to hit. It's another question on whether they will actually hit that number, or if we could see them reduce some of their spending. AMD's numbers over the time that Microsoft was likely spending this $20 billion have shown a lot of strength. This was Q3 for AMD. They showed revenue of $3.5 billion in that quarter, up 122% year over year. And they also saw their operating margin increase significantly, sitting at 29% versus 19% in Q3 of 2023. And during this announcement, Lisa Su, the CEO of AMD, had the following to say: "We delivered strong third quarter financial results with record revenue led by higher sales of EPYC and Instinct data center products and robust demand for our Ryzen PC processors. Looking forward, we see significant growth opportunities across our data center, client, and embedded business, driven by the insatiable demand for more compute." Keep in mind that when CEOs make these type of announcements, talking about looking forward into the future, this obviously is very important, because ultimately during this time, they are making this announcement during the next quarter. So it gives insight to investors on what to expect over the next quarter, along with the guidance that they are providing. And what that could ultimately mean for AMD is they are expected to announce their next quarter earnings here sometime in early February. What investors are going to pay attention to is they are already pricing in that data center growth over this past quarter has been solid, but they need to see this continue going forward. So Lisa Su needs to make very strong comments and provide very strong guidance around the third and fourth quarters for Microsoft, or the fourth and first quarter for AMD, on what they are seeing for data centers and the growth opportunities there. If we see weakness or hesitation from AMD's guidance moving forward, that could be because Microsoft or some of the other players in the AI industry have actually pulled back on some of their spending. The trend right now for AMD's revenue is in the right direction. They did see a little bit of a pullback from 2022 to 2023, where revenue went from $23.6 billion down to $21.8 billion. However, from that time period till now, we've seen revenue increase to a new record high of $24.3 billion and is growing by 17.5% year over year. But they need to see these top line numbers start translating to bottom line growth as well. The trend right now, again, is in the right direction. They're currently sitting at $1.12 of trailing 12-month EPS. However, that's still significantly off their all-time high of $3.25 achieved back in 2021. But let's revisit what exactly is being priced into AMD's stock price. Right now, in my opinion, it's in this weird middle ground, because the forward P ratio is currently sitting at a 23.31. This is right in line with the S&P 500, which is currently trading at a forward P ratio of 23.43. However, it's a little low compared to the NASDAQ 100, which is trading at a 25.12. And the reason I say it's in this weird middle ground is because it seems like a lot of investors are either extremely bullish or extremely bearish on this company. And you can even see the extreme bull side, or maybe not extreme, but at least some of the bull side reflected in EPS estimates for AMD. Right now for next year, analysts have an average EPS estimate of $5.13. That would be up year over year from $3.33 in fiscal year 24. So their current P/E ratio of 23.31 is based off an EPS number of around $5 per share in 2025. However, what you could assume is that AMD should probably trade in line somewhere with Nvidia, which Nvidia is currently sitting at a forward P ratio of 31.75. If we're making that assumption and we're saying that analysts or investors would price that into the stock, that means that with the current price right now of $116 per share, they're basically projecting that AMD will actually put up earnings in 2025 of around $3.75. If you're confused about the math that I'm doing there, I'm basically just taking the current price dividing by a potential PE ratio, and that gets me a projected earnings. So again, that's basically what investors would be pricing in if they're assuming that AMD should trade in line with Nvidia in terms of PE ratio. The other way of looking at it in a more bullish way is if AMD comes through and puts up $5 of EPS in 2025, that may lead to investors pricing the stock closer to 31 in terms of the forward P ratio. What that would lead to is the stock price increasing to somewhere around $160 per share, or around a 35 to 40% upside. But let's also consider the bear case for this company. Let's say Microsoft actually decreases their spending in the back half of the year. And what that leads to is AMD only putting up $3.75 of EPS in 2025. And with that, investors are now only willing to pay $20 per dollar of earnings. That would lead to a share price of $75, which would be a drop of around 35% from the current stock price. However, in my opinion, I just don't see the share price dropping to $75 per share. I think that somewhere around $100 is probably more realistic. The last time we saw $75 per share was in early 2023. I just don't think we're getting back that low. I think $100 is probably reasonable. I think we could see a drop to that limit, but right now the share price is currently just in this weird middle ground. That's why I haven't added it to my portfolio. I could see it dropping another 35% potentially, but I could also see it going up 35%. So for that reason, I just haven't added it because the risk reward isn't there for me. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what is a snowman's favorite seasoning? Check the comments down below for the answer. Thanks for watching.